Car prices are becoming one of the biggest questions for buyers, and in this video, we take a deep look into whether car prices, especially Chinese cars, will go down in 2026, using real market signals, global economic behavior, and industry trends. Many experts believe prices may decline because governments have started reducing import duties and tariffs, which can directly lower the cost of imported vehicles, particularly Chinese sedans, hatchbacks, and SUVs that rely heavily on import structures. China is also experiencing a major oversupply of gasoline cars because the domestic market has shifted toward electric vehicles, and this massive surplus is being exported globally at lower prices, which can push international prices down. Competition is also rising rapidly as more Chinese brands enter markets worldwide, increasing pressure on pricing and forcing companies to offer more aggressive rates. However, there are also strong reasons why car prices may not fall, including the risk of currency depreciation, which can make imports more expensive no matter how much tariffs drop, and the fact that many manufacturers historically do not pass savings on to customers even when their own costs decrease. Additionally, the used car market remains extremely strong, and high demand can keep prices stable even if import costs improve. If prices do fall in 2026, the first segments to benefit will likely be imported Chinese sedans and hatchbacks like the Chang'an Alsvan, MG5, BAIC models, Ocean compact sedans, and DFSK small vehicles, followed by used Japanese and Chinese cars such as Vitz, Passo, Aqua, Mira, used Alsvan, used MG-ZS, and used Glory 580, and finally Chinese EVs like those from BYD, Ore, and Chang'an if they expand their electric lineup. The models most likely to drop include the Chang'an Alsvan due to high supply and competition, the MG-ZS and MG-HS in the used market, the Haval Jolion due to increasing SUV competition, DFSK Glory 580 and 580 Pro because of weak resale and large supply, and potential Chinese EVs like the BYD Dolphin and UN Plus if launched. Meanwhile, cars that are unlikely to drop in 2026 include the Toyota Yaris, Toyota Corolla, Honda City, Honda Civic, Suzuki Alto, and Suzuki Swift, because these models have strong demand and solid resale value. The final prediction is that in the best-case scenario, with stable currency, continued tariff reductions, and increased Chinese exports, prices could drop around 2 to 10%, especially in the used and Chinese segments. In the worst-case scenario, if the currency weakens or policy changes are delayed, prices may stay the same or increase. And in the most realistic scenario, 2026 will not bring a major crash in prices, but Chinese cars and used cars are expected to become noticeably more affordable. Stay tuned till the end of the video for complete insights, and make sure to like, subscribe, and drop a comment if you want a full video on the best cars to buy in 2026.